Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. Tuesday morning, May the 27th. Good morning, and hope you're had a great weekend. First of all, hope Memorial Day was great, and your weekend was wonderful, and you're looking forward to abbreviated trading week this week. We are just 4 days left of the month of May, 4 days left this week, and we'll start talking about what's going on in our overnight markets and what we can expect today. Let's look first, U.S. dollar index a little bit firmer here this morning, while crude oil and nat gas is lower. Stock market is higher. President Trump on Friday or Thursday had increased the tariffs against the European Union to 50% and agreed over the weekend to lower those tariffs away from the 50% for a period till June 9th, I believe. Remove those tariffs in an effort to continue negotiations. So tariffs come on, tariffs come off, all depend upon how negotiations are transversing with the president and whatever country he's working with. Crude oil is down this morning. Gold, silver off this morning because stock market's sharply higher. We're seeing some risk off trade there. Meanwhile, corn, Dees is down 2 1/4, while beans are up 4 3/4. And a lot of the strength in the beans is coming from oil share here, another 1.2% gain overnight. Big losses in the wheat. Had a very rainy weekend for most areas over the weekend, very wet. We had, well, as of Sunday morning, had an over 9.2 inches here in Springfield. I haven't checked the gauge yet this morning, but it's been raining most of yesterday, very light rain, and hopefully it's tapering off here sometime soon. So we're 9 lower in Chicago, 9.5 lower actually. Kansas City down 11 1/4 cents. Let's talk about what's happening with these markets and what we can expect in our day today. Make sure you follow us on Twitter, Midwest Markets, Brian Hoops, and you're visiting our website where you sign up for our daily newsletters and our YouTube videos as well as our Twitter feed. All right. Let's talk more about these markets in here. So weather forecast looking very favorable, drier conditions. Forecast, especially for that eastern belt, that shall allow for a resumption of planting. Look at the 6-10 day window. It's warmer and drier than normal, which I think most people are going to accept for right now, at least a little bit warmer, drier trend. We've got some moisture around a lot of the Midwest, and we need a little bit of heat unit from what people are telling us. They'd like to see a little bit more heat, and for at least for the 6 to 10 day, that is what is on tap. And that, in the short term, is what is desired. So that'll take you out through about June the 4th. And then after that, if we start staying dry, that's going to be a concern. So we're going to need more moisture in the middle of June. But at least through the 4th or so, we're going to have really nice conditions for this crop. It's going to respond very favorably. We'll have the first corn and soybean condition ratings of the season this afternoon. And expectations are for a very highly rated crop. We could see corn and soybean ratings 75% good to excellent. I think winter wheat conditions also will improve, maybe another 2-3% this week. As it's in the last week, we've had a lot of moisture, cooler temperatures. That wheat crop is really going to grow here and thrive. Talking with some clients in Oklahoma who mentioned that it's not been warm enough to really ripen the crop. So we're still benefiting from these cool temperatures, but we'll need some heat here once we start talking June and start talking about harvest. We'll need a little bit warmer temperatures, ripen that crop, and develop it to full maximum yield potential. But I think trade's going to be focused on the good rain, crop conditions improving this afternoon. We'll have weekly export inspections at 10 o'clock this morning, and then that crop progress is at 3. So active Fed cash cattle trade in the north last week, 230 to 231 live, 360 to 365 dress. So $2 to $7 better on a dress basis, $1 to $2 higher live. And in the south, we're steady to $2 better as we traded about 220 last week. So it's steady to $2 better in the Southern Plains. Calls again this week, another call for higher money. And we didn't receive any type of real negative news over the weekend as cattle on feed report came in very, very near expectations. I think overall it's very supportive for the cattle industry. The on-feed supplies at 98.5%, a little bit less than estimates, while placements were 97.4%, again, slightly less than estimates, and down over 2.6% from last year. Very, very supportive number. Just not enough cattle out there to being placed into these feedlots. And markings at 97.5, actually better than estimates. So this report did nothing to discourage this cattle industry from continuing to march its way higher. Cold storage report came out on Friday, and this will be our first chance to react to it. Red meat in freezers were up 5% from last month, down 6% from last year. Beef in freezers were down 2% from the month, down 2% on the year, while pork supplies up a whopping 11% from last month, but still down 9% from a year ago levels. So I don't know if we'll have much in the way of reaction to this. I think a lot of the focus is on that cattle on feed report. Most of the industry is going to be looking at weakness in the cattle contracts to be buying opportunities going into the summer and our key grilling season just ahead of us now that we've had Memorial Day weekend. I am going to sign off and wish you a wonderful day of trade. As always, if you have questions or comments, reach out to us. This has been Brian Hoops from Midwest Markets. Good luck and good trading.